Hey everyone, this is Andrew Jordan from NodeWise CPA, and in this video, I'm talking about one of the really common things I see with managed service provider owners, where they end up with multiple entities and they aren't necessarily sure why. Before we get started, this video is for educational purposes only and is not tax or legal advice. Every business is different, and you should talk with your own professional about what makes sense for your specific situation. All right, let's get into it. It can be really tempting to think that having more entities, multiple LLCs, holding companies, subsidiaries, somehow makes your business more legitimate. Big companies like Coca-Cola have dozens of entities, so it's easy to assume that that's what real businesses do. But here's the truth. Those big companies have complex structures for very specific regions, things like operating in different regions, regulatory requirements, or isolating certain types of risk. For small and mid-sized MSP businesses, let's say under 50 million in annual revenue, having too many entities usually just creates friction and costs that slows you down. Let's talk about why it's often better to keep things streamlined. First, the simple test I always tell clients: if you can't explain to your spouse why you're creating a new business entity, you probably shouldn't. My wife is really smart, but she's a first grade teacher. She doesn't live in the world of accounting or corporate structure. But I can explain to her in plain English why my firm is an S corporation, and it makes sense to her. If you can't do the same, if you can't explain it clearly enough that a smart, non business person gets it, that's a red flag. It probably means you don't fully understand the reasons either. Now let's look at both sides. On the pro side, lawyers often recommend multiple entities for liability protection, and that's fair. For example, you might split your operating business from the entity that owns the assets so the equipment and property are protected if something goes wrong. Or you might separate higher risk activities from lower risk ones. A classic example is a manufacturing company that also runs its own trucking fleet. The trucking company has a much higher risk profile, so sometimes it makes sense to keep those two things legally distinct. Those are legitimate reasons. But here's the con side, and it's a big one. Every additional entity means more bank accounts, credit cards, payroll runs, bookkeeping, tax returns, software subscriptions. All of that costs money, but more importantly, it creates friction. Successful business owners talk about minimizing friction all the time. Friction slows your business down. It means more transfers between accounts, more confusion about what entity pays for what, more cleanup for your bookkeeper, and more time explaining your org chart to every banker, attorney, and new employee. When you're running 6 entities, it's easy to get stuck in the mud, and that drag can slow your growth far more than you realize. Now let's talk about tax consequences, because this is another area that people often misunderstand. A lot of business owners assume multiple entities means more tax strategies or savings. In reality, it's usually the opposite. Here is a common example. You split your business into 2 S corporations, one for the operations and one that owns your equipment. The operating entity makes money, and the assets company shows a loss because of depreciation. You think, perfect, I'll offset the profit with the loss. Except you can't. S corporation losses are only deductible to the extent you have what's called basis in the entity. So if you don't have enough basis in the asset company, those losses get suspended and you can't use them this year. That can mean a big surprise tax bill, even though economically your overall business combined broke even. Now, are there some cases where multiple entities make sense? Absolutely. For example, maybe you have a C corporation that exists specifically to run a medical reimbursement arrangement for your family. That's a clear, understandable reason. Again, one you could easily explain to a friend. But most of the time, when I see overly complicated structures, it's not because someone's trying to make their business look fancy on an org chart. It's because someone told them that they should. Maybe a well-meaning advisor, attorney, or friend, without them fully understanding the actual benefits or weighing those benefits against the cost and friction of running multiple entities. So before you go creating new entities, ask yourself, what problem am I actually solving? Can I explain this decision clearly? And do the benefits really outweigh the friction and the other costs? Because in my experience, and I've been CFO for a group of half a dozen related companies, it's almost always more complicated than you think it's going to be.